Till this moment, trading is the easiest online business model that anyone can start. And today, I'm going to show you on how you can start trading from scratch. Doesn't matter, you have no idea. And my objective of this video is to help you make your very first $100 or even $1,000 or even $10,000 trading Forex. In case you do not know who I am Daniel Latrize, and most guys call me
V-Dollar.
V-Dollar himself.
Pretty cool, alright? And I've been trading for over 6 years. And also, I am a certified day trader. And honestly, I have had a lot of success from growing small accounts to making over $100,000 in just a month. And honestly, I live the classic trader lifestyle, which is pretty amazing, because that's why I got into trading in the first place. And more so, I have helped thousands of students and people just like you to generate similar figures, just like what I'm about to show you, okay? And without any further ado, let's get right into it. So we need to understand why trading in the very first place. Well, trading is still the best online trading business model to start now. And here's the reasons, okay? Well, very first thing is there is no competition, okay? In trading, there is nothing as competition to say Daniel is a trader and you are a trader and in some way we are competing. No, I'll tell you about that in a moment. But trading is pretty much global and there is nothing as competition, okay? Then AI won't replace your job, okay? Now, I do believe you guys now understand that we have AI taking all over all sectors. I don't know, video editing, what, and all that kind of stuff. But in trading, that's not happening. And that's a big win, okay? Then there's unlimited profit targets that can be hit, okay? Till this moment, trading is the Till this moment, trading is the easiest online business model that anyone can start. And today, I'm going to show you on how you can start trading from scratch. Doesn't matter, you have no idea. And my objective of this video is to help you make your very first $100 or even $1,000 or even $10,000 trading Forex. In case you do not know who I am Daniel Latrize, and most guys call me
V-Dollar.
V-Dollar himself.
Pretty cool, alright? And I've been trading for over 6 years. And also, I am a certified day trader. And honestly, I have had a lot of success from growing small accounts to making over $100,000 in just a month. And honestly, I live the classic trader lifestyle, which is pretty amazing, because that's why I got into trading in the first place. And more so, I have helped thousands of students and people just like you to generate similar figures, just like what I'm about to show you, okay? And without any further ado, let's get right into it. So we need to understand why trading in the very first place. Well, trading is still the best online trading business model to start now. And here's the reasons, okay? Well, very first thing is there is no competition, okay? In trading, there is nothing as competition to say Daniel is a trader and you are a trader and in some way we are competing. No, I'll tell you about that in a moment. But trading is pretty much global and there is nothing as competition, okay? Then AI won't replace your job, okay? Now, I do believe you guys now understand that we have AI taking all over all sectors. I don't know, video editing, what, and all that kind of stuff. But in trading, that's not happening. And that's a big win, okay? Then there's unlimited profit targets that can be hit, okay? When we are trading, we are dealing with a global market, okay? And there is so much money to be made. And you could be part of the people that actually get to tap into that, okay? More so, it's still very flexible and passive, okay? Doesn't matter, you could trade while you are on your vacation or you're at school or you're doing your normal job and all that. It's very flexible and more so you get to earn passively, okay? Anyone can start trading and actually get profitable in a record time, okay? Now, I'm saying this because it has happened to me myself, but then more so for the students that have been able to trade. I've seen this happen. I just want to show you just a bit of results, okay? So pretty quick one, you can clearly see. So just in this first case study, we have Nim Forex. He was able to make over $233 from an account of $500. Pretty cool, I mean, right? Then over here we have $400 in profit on account of about $1,000. That's pretty cool, okay? But more so, look at this. So this is an account of $1,000, okay, with profits of over $2,000. So that's like 200% returns on just a small account. So this should show you the possibilities inside the trading space, all right? And I want to show you on how you can exactly be able to do this. So let's start from the word go, okay? So this is what we shall cover. We shall look at what trading is. We shall look at brokers, trading platforms you may need. Then we shall understand the basics, okay? Then understanding chart types and how to read the charts. That matters a lot. Understanding candlesticks, market structure, understanding timeframes and which type of a trader you could be. Unveiling a trading strategy. You need to wait for that. It's very important. Then placing your very first trade, risk management, and trading psychology. All right. And honestly, there is no detailed course just like this over here. All right. So grab a drink, get some popcorns, and let's get right into it. So let's start off with understanding what trading is. Okay. So trading is the buying and selling of currencies. Okay. Fast forward, we buy when the value of an asset goes high and sell when the value goes down. Okay. So we are pretty much dealing with currencies, and that's why it's called Forex, or foreign exchange. Now, I do have some examples here, all right? I do have multiple currencies. This is the Kenyan shilling, okay? So this is 100 Kenyan shillings. Then I have 100 South African rands. I was in South Africa a few days ago, so I got this. And then for some reason, I have this rupee, okay? This is from Mauritius. Got this from my trip in Mauritius. So what's happening with trading is you are exchanging the Kenyan shilling for the rand, all right? So in other words, if say you had this, all right, and you wanted this, you are going to sell your Kenyan shilling to get the rand, all right? Or you are going to sell the dollar to get the pound, okay? So in other words, you are buying and selling. So in any case, we have two currencies in one transaction, okay? And that's the easiest way to understand the whole concept. Now, what matters is every time we are trading, there's always fluctuations, okay? Sometimes the price is going up, sometimes the price is going down, okay? And that's how we pretty much profit. You need to understand when is the price of, say, the dollar going up. Oh, okay, it's going up. Let me go ahead and buy. Or on the other side, when is the value of the dollar going down? Okay, cool, I see it. Let me go ahead and sell. And that's how the money is made, okay? Well, in here we have a clear example. So we do buy when the price is going up and then sell when the price is going down. The green shows raise in value and then the red shows the drop in value, okay? So this should be a very easy illustration to show you how we trade, okay? So your duty as a trader is to study and predict future price movements to be able to profit. That's it. So we call that analyzing. So get the charts, analyze and understand that, okay, cool, the price going up, I think I need to buy. Or the price going up, down, I need to sell, all right? Now, Forex trading majorly deals with currencies, just like what I just showed you. So e.g. selling the dollar for the pound. In that scenario, we would have GBP, which is the pound, all right, against USD, which is the dollar. So in this scenario, we have this as a pair. Or on the other side, if say we try to pair this, okay, we could have the South African rand against the Kenyan shilling, all right, or the South African rand against the Mauritius rupee, I would say, okay? Perfect, awesome. So let's just proceed, okay? So it's often two currencies to form what we call a currency pair. Now, examples do include GBP USD, just like what we've just seen. Then we have Euro USD, and that's the euro against the dollar. We have USD JPY, and that's the dollar against the yen. We have GBP JPY, which is the pound against the yen, okay? Then we have AUD USD, which is the Aussie, all right, or the Australian dollar against the US dollar. And then we have NZD USD, which is the New Zealand dollar, or you can call it Kiwi, all right, against the dollar. And so on. We have very, very many pairs, like crazy many pairs. The most interesting part is we can still trade stocks, crypto, and futures with the same understanding as for the Forex market. If you can clearly digest what I'm going to show you in here, then you can apply this exact knowledge on stocks, crypto, and futures, okay? Because all these are financial markets and pretty much the same charts. That means if you have a trading strategy here, it could actually work even for these other instruments, okay? Now, to even better understand the Forex market, well, it's a global financial market with multiple participants, okay? The Forex market is the biggest traded financial market in the world, followed by the stock exchange, in other words, the New York Stock Exchange, okay? And market participants include retail traders. Retail traders is just like me and you, okay? You're trading with $1,000, you're trading with $10,000, $100,000. Well, you are a retail trader. Okay, then we have hedge funds. Hedge funds are firms that manage investor capital. Okay, say you have $1 million or you have 2 million or whatever, get this money into that hedge fund, so they get to manage your money with a profit split depending, okay? Then we have prop funds, I'll talk about that later. Then we have big banks. That bank in your local area probably has a trader inside, because whenever you deposit your money in there, well, they need to profit. And the financial market is there. And actually, more fair enough, whenever you're in these banks, you'll see on the screens with, exchange rates and all that. So banks trade, okay? Now, since you made it this far, I invite you to the exclusive family by smashing that subscribe button. The goal is 1 million subscribers, and you can be part of this exclusive community. We have a saying, let's talk and more action. And with that, let's dive straight back into the video. Now, to start trading, you need a broker, okay? So now we are getting into the source on how to really actually get started with your trading, okay? So what's a broker in the first place? Well, this is pretty much an intermediate between you, the trader, all right, and the financial market. So we have you being the trader, and now you need access to the financial market. So in between, you need a broker, okay? And that's very, very important. So the broker handles transactions on your behalf, okay? So in other words, we have you, all right? You, okay? And then we have the broker in between, and then the financial markets, okay? That means in any case, if there's no broker, then you pretty much can't trade, okay? Now, the question should be, how does one choose a broker? Or how do I find a good trading broker? And that's what we are moving on to, okay? So choosing a trading broker matters the most. And here's what to consider before choosing one. Number one is regulation, okay? Legitimate brokers must be regulated. That's very, very important. In no way do you want to trade with unregulated offshore broker. It's not good for you, okay? More often enough, if you're going to make crazy money, you don't want your money to be in unsafe places, okay? Then we have fees, spreads, and commissions, okay? Different brokers have different fees, okay? Remember, it's just an intermediate. So in other words, they'll profit off you, okay? So these fees shouldn't be ridiculous, because if they are, then it's affecting you as a trader. I'll talk about the spreads later on, and then commissions. Well, different brokers do charge commissions, but for the one that I'm going to show you, then there's nothing as commissions, okay? Then transaction speeds, that matters. We start with deposits and withdrawals. How long does it take for you to make a deposit or your withdrawals, okay? But more so, we also need to talk about the execution speed. If you are placing a trade, how long is it going to take before it's fully executed? Or if you are closing off that trade, how long is it going to take before, the trade is closed? Then more so, we can also talk about leverage, okay? We shall talk about this in detail. So different brokers offer different leverage, all right? That's very important. And then lastly, trading platforms, okay? Some brokers do allow platforms as TradingView, MetaTrader 5, or they have their own custom platforms, okay? And there's so many other things to consider. Other things that you can also look at is, what do you want to trade? Do you want to trade crypto? Do you want to trade Forex? Do you want to trade stocks? If so, then look out for a broker that does offer all that, okay? So there's so many other small things to consider, but these are the most important ones, okay? So I want to go ahead and show you on how you can open up a trading account with a broker. All right. So let's shortly understand what a real account is, okay? Now, when it's time to trade, you'll need a real account. So a real account is a live funded account with real money, okay? So you create an account, verify it, deposit money, and in actual sense, you're able to trade and able to make real profit. But then on the other side, we have what we call a demo account. So a demo account is pretty much a demonstration account with virtual funds for practice, okay? So most brokers offer this. So in here, you're profiting nothing, but what matters is you are learning, you are practicing, you are trying out different strategies to see what really works. So that's what matters, okay? So in other words, the best advice that I would offer is you need to practice firstly on your demo account before you can switch over to a real account. That's very, very important. You need to get extremely good before you can go live. Now, let's go ahead and understand on how to open up a trading account. I'll switch over to the broker and then show you on how to do so, okay? So let's just quickly go ahead and do that, okay? So in here, the broker that I am using is Exness, okay? So for this, we shall be using Exness. It's a good broker and I've been using it for a very long time. Should be about 4 years. And I want to show you on how you can easily open up your trading account. So I'm just going to quickly go over here and then I'll show you that. So down in the description, I've added my partner link that is going to take you directly to Exness. So come over here, fill in your country of residence, your email address, your password, and click register. So with that, you're pretty much good and you've opened up your very first trading account. Now, mostly you need to verify it with your government ID or your passport and all that. That's very important for you as a trader and for your safety. So once you have verified your account, this is how it looks like inside, okay? So you have real, you have demo, you have archived, okay? And over here, you have your account balance reflecting. You can clearly see $0.0. So the very first thing that you need to do is you can go ahead and open up a real account. So just come over here and there you go. So we have standard cent, pro, raw spreads and all that. But I would recommend the standard account. So click that and then go over to continue. All right. And then we have demo or real. For this scenario, we shall create a real account. But then remember, I mentioned it's way much better to start with a demo account before you go over to your real account, okay? So go ahead and choose the currency that you'd want to trade in. Now, the coolest thing about Exness is you can trade even in your local currency. So say you want to trade in the South African rand, go ahead and select that. Or you want to trade in the Ugandan shilling, go ahead and select that. It's so cool when you get to understand the money that you're making in your local currency, okay? So let me just go ahead and keep that. The nickname, add the name that you want to use. I'll add $. And then we have leverage, okay? I'll talk about this later on, but you can choose say 1 to 500 or more. But then what matters is the bigger the leverage, the bigger the risk, and I'll talk about that later, okay? Trading platform, we have MT5, MT4, and then Exness. But I recommend MT5, okay? And just go ahead and enter your password, and you have your first trading account open. Now, to deposit, it's pretty much easy. Come over here to deposit. So for you to be able to deposit, you actually have to have an account first, okay? So once you've created your account, okay, just like what I showed you, go over here, deposit, and you'll find multiple payment options. Local payment options, mobile money, cards, crypto, and all kind of stuff. So whatever works for you, even better. And the most interesting part is the transactions are instant. You'll make a deposit and it's on. You'll make a withdraw and it's instant. That's really cool. I value that as a trader. All right. So you now have your first trading account opened up. Now, let's go back to our presentation and move on further. Now that you have your trading account open, let's understand the trading platforms to use. And by the way, I didn't mention, it doesn't matter if you want to trade, you can use your phone, you can use your laptop, or you can use a tablet, whatever. but honestly, a mobile phone is all good, all right? So for you to trade, you need 3 platforms, okay? Number 1 is MetaTrader 5. So to get this, just go over straight to your App Store or Google Play Store and type in MetaTrader 5, okay? And then you'll be able to install that. Then you need TradingView. I'll show you that. And then lastly, investing.com stroke an economic calendar, all right? So this is how MT5 should look, all right? So this is the logo. Go over to your App Store and install this exact platform. And then TradingView, this is how it should look. I'll show you this practically. And then lastly, we have investing.com, okay? So once you have those, then you're pretty much good to start trading. Investing.com is an economic calendar. And why economic calendar? Remember, we are trading financial markets. So we have to stay updated with economic events, because if you're not, then well, more fair enough, you're going against what could be happening. So you need to stay updated, okay? So I'll show you the practical guide on how to sign up with TradingView.com and then MetaTrader 5. Now, let's go ahead and understand the basic key terms in trading. These are words that you'll find over and over and over again, and you need to understand this. Very firstly, a currency pair. It's a quotation of 2 currencies. So the first currency is called the base currency, and then the second currency is the quote currency, okay? So we have a base and then we have a quote, okay? So in this scenario, this is a case study. So we have GBP stroke USD, and this scenario GBP over here, okay, is the best currency, and then the dollar, all right, is the quote currency. Now, something to understand is whenever you are trading, the transactions that you are making often affect the first or the best currency. In other words, if we said sell GBPUSD, this means you are selling GBP, okay? And in return, buying the dollar. So in other words, this first transaction is going to affect the best currency. And then there's another transaction on the back end, which is going to affect the quote currency. So 2 transactions happening simultaneously. Now, currency pairs are divided into 3 types. So we have major pairs, and these are the most traded pairs. They have the USD in them, okay? So obviously examples could include GBPUSD, EURUSD, USDJPY, USD CHF. So these are the most traded pairs, and they should have the dollar in them, okay? Then next up we have minor stroke cross pairs, okay? So these pairs do not have the USD in them. Examples could be Euro GBP, GBP JPY, Euro JPY, and you can come up with many others, okay? Then lastly, we have exotic pairs, okay? Exotic pairs are those from emerging economies, okay? And they are the least traded. Examples include USD against the rand, USD against the Ugandan shilling, USD against the Kenyan shilling, and so forth, okay? So these are from emerging economies. And listen, boy, I wouldn't recommend that you trade this, okay? There is never major significant moves, and honestly, you stand not to make any money unless you're going to hold them for a very long time, okay? Next up, we have a PIP, okay? So a PIP is the smallest price movement in a pair. An example is, say we have GBPUSD moving from 1.3100 to 1.3101. That's a 1 pip movement, okay? So this is going to be very important as you now start calculating. You need to understand how much money am I losing, how much money am I standing to make, all that kind of stuff. Then we have a spread, okay? So a spread is the difference between the ask stroke the buying price and the bid stroke the selling price, okay? So in other words, the spread is equal to ask price minus the bid price, okay? And this is where the broker makes money. Now, listen, pay attention, okay? The tighter the spreads, then the better for you as the trader, all right? You don't want to trade with a broker that has crazy spreads, because in other words, that making more money off you, yet you could have better options. In the first place, that's why I recommended Exness. So even once you're done with the video, if you haven't opened up your account, go ahead and open up your account, okay? Next up, we have leverage, okay? So this is borrowed capital from the broker to increase your trading capacity, okay? An example is, say you have $100 for your capital with, say, a 1 to 100. This is now your leverage, okay? This means you have over $10,000 in trading capacity. So it's pretty much your capital times, okay, or multiplied by the leverage that you're using. So in this scenario, we have the 100 times the 100, and you have $10,000 in trading capacity. That means with this $100 with a 1-to-1 leverage, you can't open up bigger positions. But now that you have 1 to 100, then you can open up bigger positions, okay? And that's the cool part about the leverage. Now, one thing that I didn't mention is the bigger the leverage, then the bigger the risk, okay? So for some brokers, it goes to an extreme of like 1 to 2,000, which is cool on the other side, but then on the other side, it's very dangerous. Most importantly, when you do not understand how to deal or use it to your advantage, you could easily end up blowing your account, which isn't cool, okay? So you need to keep your leverage in between. It doesn't have to be too small. It doesn't have to be crazy big, okay? Perfect, cool, let's go. So lot size, okay? This is a position size for each trade taken. One standard lot is equal to 100,000 units. Then a mini lot is 0.1 lots, okay? Please note with a capital L. Then a micro lot is equal to 0.01 lots. Now, you'll meet this when you place your very first trade. You need to understand, okay, cool, how many lots am I going to open for this particular trade? For small accounts, say $100 to $500, you can only trade with micro lots, okay? Say 0.0, 5, or say 0.09, and so on. So what you need to understand is the bigger the lot size, then the bigger the risk, or the more you are exposing your account to risk. But then obviously the coolest part again is you stand to make more money if you used bigger lots. I'm not recommending that you use bigger lots. What I'm trying to share is you must use calculated lot sizes that match your trading account. Next up is a stop loss and a take profit. So stop loss is an automatic order that closes a losing position. Then a take profit is an automated order that closes off a winning position. So you don't need to be all over the charts, watching, no, set your stop loss and your take profit and go do your other things, okay? And let the trade play out as, it's supposed to be. Now, this is how it should look, okay? So in this scenario, if say you are buying, you'd have your stop loss down because you do anticipate that the price is going to go up. And that means if in any way the price drops down, you have your stop loss and then your loss is going to be cut short as the price goes up. So you have your take profit over here and then your stop loss somewhere down here. Then on the other side, if say you are selling, obviously you do expect the price to go down. So all you need to have is your stop loss slightly above, meaning if in any way the price pushed up, well, you could have your loss cut short as the price, goes opposite or something. But then most importantly, you also have your profit target or your take profit, meaning once the price drops, it's going to hit your take profit and, you're pretty much secure. Next up, we have a margin. So this is the amount of money required to open and keep a position running. Then a margin call is an alert to add more funds to keep positions running. So say you opened up positions and the trade is going against you and your account is down, the broker is going to send you an alert and we call that a margin call. Oh, hi, Mr. Daniel. You need to add in more funds to keep your positions running. But you don't want to be in that place, honestly. That only happens if you over-risked, which is not a cool thing if you are trading. Perfect. Now, next up is understanding the concept of buying, okay? Or going long or bullish, okay? So we buy when the price is going up. So other terms could be buying or going long or bullish. So you could hear something like, I am bullish on the dollar, or I am bullish on gold, or I am bullish on Bitcoin. Pretty cool. So that means I am buying the dollar, I am buying gold, I am buying BTC, okay? Then on the other side, obviously, just a bit of illustrations. So there's the bull, okay? So we are bullish, that means the price going up, and then this is how it looks. Then the other side, sell or going short. Pretty much when the price going down, we are looking at selling. So you hear people say, I'm going short, or I'm bearish on the dollar. That's a cool term. Can you imagine? You can share that to your friends, okay? Or I am bearish on Bitcoin or I am bearish on gold. That means this trader is selling gold because they believe that the price of gold is going to drop. So that's it. So illustrations, this is the bear, so bearish, and then this is how the price is dropping. So you can have these illustrations, and please rewatch this session over and over. I remember when I was getting started, in some way I had to draw these things on the side, so I'd always remember, okay, we buy when the price is going up, so we are bullish, and sell when the price is going down, and so we are bearish. Like that. Pretty cool, right? So now let's just go ahead and understand the charts and how to read them. Okay, so we basically have three major chart types. Okay, so we have the candlestick chart, then we have the bar chart, and then we have a line chart. Okay, the candlestick chart is the most commonly used. Okay, and this is how it looks. Okay, so obviously this is just a series of these blue and black candlesticks. Okay, I'll tell you about that. So this is an example on Euro JPY on the daily time frame, and as it's looking, so in this scenario the price is going up. Okay, and there you go. Then we have an example of a bar chart still on Euro JPY. Okay, this is actually the same illustration just like this, only that this time around this is a bar chart and this is how bars look. Okay, so you have these bad boys looking this way. Okay, see that? So still price going up. And lastly, we have the line graph still on the same pair Euro JPY on the same time frame, but this is how it looks. So line charts are the ones that are often used on news, you know, I don't know, a forecast and all that. They often use line graphs. Well, I believe these are very easy for the common person to actually understand, but you as a trader, well, you need the candlestick chart because it's actually easy. Don't mind. Okay, so we shall majorly focus on the candlestick chart, and this is why. Okay, well, firstly, it's easy to read, and then it tells more details as compared to the bar and the line chart. You need to get the details. You need to understand what the price is really doing in real time, and line graphs won't tell you that stuff. It's only candlestick charts. Okay, so the candlestick chart is a collection of candlesticks reflecting previous price data. Okay, an example. All right, next on Euro JPY, let's just go ahead and look at that. There we go. Okay, so this is on Euro JPY 24 hours, and that means on the daily, and we have this. Okay, so we have, if you can look at this bluish candlestick, that means it's bullish. Okay, and then we have these smaller ones here, all right, the black ones, and that means they're bearish. Okay, so for you to understand this really easily, for most trading platforms, they have bullish candlesticks in color green, okay, and then bearish candlesticks in color red. Okay, but it doesn't matter, you can always adjust these to your preferred color settings. I personally chose bullish to be blue, okay, and then bearish or the black ones to be black. So it doesn't matter. What matters is understanding the concept. So what's a candlestick then? Because
Hey, see me. Watch it. เป็นไงบ้าง